Hello, this is Steve Malone with Compass FX. Hope you're doing well today and you're getting some good trades. Recently, I did some videos about the market taking 3 steps in a direction before making a reversal. As a matter of fact, today we saw a 3-step market structure in the euro dollar down a 15-minute chart or on your 30-minute charts where the market had made a move to the upside. As you can see here, we had a strong rally up. Market pulled back a little bit, then a second step up, flat, and now a third step up. And the market going flat right now. Now there is some potential to see the market push up higher, but generally after a 3-step move in a direction, we look for the market to get a little range bound and then show us a pattern set up in the opposite direction. So I want to talk a little bit more about this 3-step market structure, but today my example is a bullish move to the upside. Earlier this morning we had U.S. retail sales, which came out worse than expected. This is the 3rd month in a row we've had worse than expected retail sales. Well, that led to some market participants getting out of the dollar, so we had some weakness in the dollar today, and that saw the euro dollar move up. What I want to talk about a little bit more in detail, though, is this 3 market structure. I see this over and over again. Now, this is synonymous with the Elliott wave, and that's what some people refer to this as. It's something I've noticed before I even knew about Elliott wave, was the market has a tendency to move in steps of 3, get range bound, show us a potential chart pattern, and then make a potential reversal. Well, with this move up, and then you take a look at the Traders Dynamic Index, you can see down below here that we have a high, a higher high, and this one just about the same as this high over here, and the market baseline moving up. I suspect that there's a potential the market may attempt a pin high, come back down, maybe make one more attempt up, and that would give us a head and shoulders pattern here. Well, where's the market going to? Let's take a look at our Fib extension. If I take the Fib retracement tool, run it from this high point down to the low point here, if the market continues to push up, there's a potential to see the market move up to about 122.97. And as a matter of fact, we have a high up around that 122.97 area that we need to be aware of. Let's step out and take a look at the 4-hour chart. Now, as we can see on the 4-hour chart, we've had this long move to the downside here. As a matter of fact, the market made a pretty good move up, bounced around a little bit, gave us a double top, push down, and then we had this strong push down followed by another push to the downside. So we, in a way, had a 1, a 2, and a 3 to the downside. And inside of these, you can see here there's a 1, 2, 3, and inside of this one, another 1, 2, and 3. So you can see this over and over again. Well, today, on the 4-hour chart, a nice push to the upside. And what I want to point out is where potentially can the euro go up to? Now, fundamentally speaking, there's nothing new about the Eurozone. It still has a lot of problems. The ECB is attempting to make some reforms in the bond market related to the Spanish bailout. And I'm not sure if that's going to come through or not. So fundamentally speaking, there's nothing new here. But when we see these steps in the marketplace, there is the potential of the marketplace to make a reversal. And here we see the euro dollar attempting to make this reversal back up. We do have kind of a triple bottom here, so there is that potential to the upside. And if you look at the Traders Dynamic Index, it's trying to put another move to the upside. Now, where do we go? I simply look at the previous highs and previous lows. This high coming back here on the 11th of July is sitting at 22.95. Then if we step a little bit further out, we have this high, July the 10th, at 23.32. Then let's start looking at some potential lows on this move down. We have this one here around 23.62, and this one up here, which would put us back up into a range level around the 124. Now, I'm not sure if we're going to get all the way to that level. I do suspect there's the potential for a 23.6 retracement, which puts us right about that 22.95 high point that we had on the 11th. As a matter of fact, 23.6 comes in at 122.86. A push beyond that we see is at the 123.63, which sits right in between these two levels that I've talked about. Some analysts in the marketplace are suggesting that we'll see 123 to 124 before we push down to 121, where we have some sizable options, barrier options down at that 121 level. So I suspect that we'll see the market continue to have bearish sentiment, but I think right now, with the additional short sales put in by specialists over this past week, I do see the potential of a short squeeze up. I'm just wanting to highlight the levels of where the short squeeze could potentially go to. Again, the focus of attention though is the three-step market structure. When you get this three-step market structure, look for the market then to play itself out. We might go range bound here, and the further range bound we go, the greater chance of push back down. However, if we stay in this little area here, look for a potential chart pattern that would suggest a short bias, like a head and shoulders or a double top type pattern, and then look for the market to make its push back down. So when considering a potential fall back down, let's consider where the targets might be. There's two things you can look at. You can look at your Fib retracement, or you can look at previous lows. If we take the Fib retracement, run it from the low to the high here of this move, we can see the 23.6 comes in at 122.61, the 38.2 at 22.44, 50% at 22.31. The key one will be 22.20 level, which is right around the 618. I do suspect the possibility of the market pushing back down at least to the 22.20 level. Now let's just look at the previous lows that we've had. We have a low sitting right here that's about the 22.50 area. We have another low sitting right in here. Now if I take the average here, that average comes in right about the 22.13. A little bit below the 618, but these would be the two levels, just looking at previous lows, for the market to potentially get back down to when we look for that potential roll back over. Remember, nothing fundamental has changed with the euro. We just have this bullish three-step market structure to the upside. Look for continuation of bearish sentiment on the euro dollar, because fundamentally nothing's really changed with the eurozone. Well, folks, this is Demon Alone with Compass FX. Y'all make it a great day. Get some good trades, and we'll talk to you next time. Bye-bye.